Hi everyone, thank you for watching this on my YouTube channel. Today I'm going to share with you something quite boring, right? Maybe of interest to some, but the whole point of this is not to appeal to everyone. I'm presenting something today regarding black or white. Okay, sounds quite odd. And the theme of the PowerPoint here is that it's literally black or white. Okay, it's black or white or black and white. Thank you once again. I'm Will Dicha. You're watching this on my YouTube channel. So today the topic is black or white. Why have I chosen this topic? Well, you know, I have had the privilege of being able to meet many people in my lifetime. I met corporate people as well as private individuals, and whoever they are, there is always something that fascinates them, at least a few of them, and one of which is investing. You know, the usual coffee conversation would go like that. Hey, that is a value stock. Someone else would say that, would ask, why so? And the reply will normally be, oh, because of this reason, so I think it's a value stock. So I seen this kind of scene so often in my, in my social network, in my social circle so often. And there is so much, like similarity in each of this conversation. Usually there will be someone who seems to know everything, and usually there will be someone who will be more than happy to hear out what that Mr. Know It All have to say. And then at the end of each conversation, or maybe not at the end, but somewhere in the conversation, someone will have something to say like, I think the fair value is X dollars. And you know what? Usually there will be like hundreds and hundreds of reasons to justify why is it X dollars, and usually the reasons sound very compelling, uh, very convincing, even if these are somewhat flawed, you know. But what many of those acquaintances and people I come across, what they are most interested to hear at the end of every conversation is, what is the price? You know, and then what was the next question? When? So in that same breath, you hear of two questions: how much and when? But you know what? That is a commonly recited question. What's wrong with that question? Because in this line of how do I put it? In this line of work, okay, if you like, it's work. If not, it's this journey, whichever way you like to put it. This process of investing is not exactly black or white. It is not. But asking for time and how much, that is basically a way of asking for when, with a lot of demand or emphasis on certainty regarding if that certain price would even materialize, right? So, but yet, I in these conversations, I seldom hear of questions like, what's the lower end of the fair value? Does it have to be the X dollars? Could it be something else? Is there any possibility that it might be higher by 10% or lower by 10%, right? And the fact is that investing is a process influenced by many factors, where the outcome is totally uncertain. Why? Because who are what actually influences the price? Who really influences the prices of stocks? It's actually people, individuals, investors like you and I, right? The audience out there who is listening to this presentation, right? It's a function of many factors, at work. At the same time, people might buy for reasons like I have excess money. There are yet at the same time investors selling out because they need the money for their kids' education or for paying bank bills or whatever it is. There are lots and lots of reasons. So as a result, the fair value that analysts claim would tend to be something not likely to materialize or not likely to crystallize in practice because of things such as uh, sellers that are in a hurry or buyers in a hurry, or impatient buyers, or perhaps buyers who are very patient. So many a time, investing is not black or white. Is very often different shades of gray, right? It is not a definitive and absolute process. It is a range of gray, a range of black or different shades of white. And if you understand that, then you should be able to appreciate this. The reality is that investment entails making decisions with fractional pieces of information. That's why you cannot have certainty as to what's the fair value when. Because the information that you actually receive in the public domain, these news have already went through several parties before these actually go on to Bloomberg or Reuters, and you get to read these on your phone, right? So by the time when you get this information are no longer fresh, right? Whereas those who have received the information earlier, they would have acted on these, and they would have already, moved the market to some extent, or maybe not at all, right? So, and of course, there also are considerations like, for instance, there is a piece of sensitive information, okay? Insiders received that information, didn't act on it, and that piece of information went out to the public. No one acted on it because no one was interested in the stock. No one did anything, right? So even that fractional piece of information, even if it's received and that no one acted on it, doesn't mean that yourself acting on it will eventually cause you to make money. It doesn't mean so, because there is a lot of inefficiency in terms of information flow, right? That's the reality. If you understand that, that's the fundamental mistake that many investors have made. They come across an analyst report and think that, oh, well, I'm going to buy this stock because X so and so claim that it will be something something. But hey, that's not the case. Reality is far from expectations. There was a very interesting quote from Howard Marks. He said that in theory, theory is similar to practice. In practice, theory is not the same as practice. Because in practice, or in reality, there are too many variables at work. It's very hard to say that, well, the company closed this sale, the company launched this product, it must have even more profits and it must appreciate in terms of share price. That's not true. Many businesses have appreciation in share prices, but their share prices hardly move because the market is simply not efficient. Information flow is not comprehensive, it's not thorough, it doesn't cascade across all segments of the population. Not all segments of population would be rational enough to act in a similar way towards that piece of information being received, right? That's a very important reality that we all have to come to terms with. Which, I'm always very amazed, when I come across all these YouTube presentations where some guru will say that, hey, buy stock X because that's very safe. I have to tell you, if you want to talk about safety, I can give you lots of examples where safe stocks end up causing people to lose lots of money. Right? There are far too many examples. Of course, just a very simple example offhand. Recall about the Nifty 50. The Nifty 50 were the best performing stocks, highly rated by Morgan Stanley, JP Morgan, back in the 70s, right? There was Kodak, there was the IBM, and all these highly promising businesses, right? Lots of people went in to buy these stocks at 50 times PE. Guess what? What happened next was that because investors bought at such high PE, they all lost money at the end. Because what defied gravity will not defy gravity for very long, right? So it's very hard to give a simple formula to say that, you can do X and get result Y. That is very often unreal, right? Because if it's that easy, you wouldn't be here watching my presentation. And that's precisely why I have this piece of knowledge to share with everyone. Okay, for free, and of course, I'm not going to ask you to pay for anything, right? So realizing this reality is important. We cannot recognize this reality that, we cannot live and expect to be successful without recognizing this reality, right? We have to recognize this reality that certainty is not possible, right? And in fact, Howard Marks from Oaktree, he said that their business in investment involves dealing with uncertainty. And I suppose, and I have to say, that it applies to anyone dabbling with stocks or any form of investments, because it is really a game. I like to say that it's a game, not just work, but it's really a game where the ability to deal with uncertainty is what defines success to some extent. No, not totally, right? In fact, it's like any games of chance, the ability to deal with uncertainty is very important. Like, let me give you a simple illustration. It's very generic, but I think it's very important. Like, for instance, you have a game of you are playing poker, with your friends. You know that you have a lousy hand of cards. Why do you want to bet a bigger sum? Right? You want to hold back instead. That's exactly the same in investing. Where there is uncertainty and it's significant, why stick your neck out and put a bigger sum? Right? And you know that if you do so, the odds are against you. Right? And what we can do is that if we cannot be certain, we can certainly improve our odds. Okay, I'll give you an example, simple one. That is, if you know that that certain stock has a high chance of losing money, why not place a smaller position? So if things go southwards, at least it doesn't end up getting you out of the show, or and that's very important, because in investing, the time when you lose is when you're driven out of the show and you're out, right? So being shaken off is a very real problem. It's a very real risk, right? So you cannot afford to be shaken out of your position. If you are, then too bad, you're out of the game, right? And when you're out of the game, that's where you would not perform, and you lose money, right? Okay, going on to the following. There are no absolutes. No absolutes. What do you mean by absolutes? Or what is it about absolutes? No, absolutes means that you do something and you know that for sure you get result X or result Y, right? That is really the point about it. You get a result X or result Y. Okay, but investing, you don't get such absolutes, right? And this is a very important takeaway for you all out there, who are getting into this maybe for the first time or for many times, in your life, right? That we have to appreciate that in all decisions that we make in investing, there is a lack of certainty. Whether it's an absolute lack or a minor lack of certainty, whichever it is, it it has the ability to impact the outcome of the decisions we make, right? So if you look at physics, to quote Howard Marks again, right, you turn on the switch and electricity flows through the circuitry, then the lights are on. That's certainty. In fact, that's what we all learn in science. Okay, by the way, I'm a science student previously. That if you have if you actually attach wires to the light bulb and the battery, yeah, the light bulb should light up, right? But in investing, if you do X plus Y, or maybe you try to attach the wires to the battery and maybe to something else, the outcome may not be predictable. It may not exactly give you Z, right? There are more likely outcomes than the one you're anticipating, right? So if you understand that, then you're less likely to be, what you call it, disappointed, right? And if you get disappointed, you start to think of, why not I sell the stock because I made a mistake of buying it. And that's the problem that's the mistake that many investors make, because the process of thought is not very well developed, right? And it's not very well developed, what happens? You make mistakes like, I bought wrongly, okay, I'm going to sell out. And then you see the losses on your account, and you decided that, hey, that's not for me. I'm going to forget about it and do something else. Focus on my work, start a side business or something. That is a horrible mistake to make, right? And day to day, these mistakes are being committed by so many other people in public, right? How do you avoid that? Okay, that's a topic for another day. So certainly it is simple, but not easy, right? To quote Howard Marks again, right? Because the process of these concepts, understanding the concept isn't difficult, right? Like we all know how to calculate price earnings ratio. We all know what is earnings per share. We all know what is net asset value. But then the process of coming to that decision where you finally say that, aha, that's the stock I want to buy. That isn't easy. Buying is easy, but the thought process as to coming to that conclusion is not the same, right? Now, attending a talk for a few $1,000s over the weekend and hoping that the presenter can give you some tips. Now, it is not so simple like this, because there is far more being involved, right? How would you know that Jeff Bezos would own Amazon and he would run the most successful e-commerce company today, right? Okay, unless you're referring to Alibaba, which is also very successful. But you know what? The fact is that it's not that easy. You can't just sit down, in the 1990s and talk to Jeff Bezos when he was still with D.E. Shaw and ask him, what do you think about Amazon? He wouldn't be able to tell you that Amazon would be an outstanding success. He wouldn't be able to, right? Back in 1990s, when Jeff Bezos was driving a Honda Accord, a 10-year-old Honda Accord, delivering books, would anyone have expected him to be the richest man? No, not possible, right? You can't do that, right? Looking at Jeff Bezos today, you would think that, he's successful, I'm going to invest in him. Now, the difficult part is, how about if you can go back in time in the 1990s and you meet Jeff Bezos and you can form that idea that I'm going to invest in him because I know he'll do well, right? That ability to triangulate to that decision, which is likely right, isn't easy. It takes lots of practice. You may get it wrong, and the fact is that you may get it wrong. If I can rephrase it in another way, you're likely to miss, very likely, in fact, very, very likely, that you miss a few decisions and you end up the other way. But the point is, you are going to aim to be quite right for most of the decisions, so that the many right decisions, which is slightly more than the wrong ones, will make up for the losses you incur in the wrong decisions, so that eventually your portfolio will generate you a positive return. That is really the thinking. It's not to get the few stock right, get the next purchase right, you bet your whole ranch and you hope that you get it right, you get a few more ranch back. It really doesn't work like that, which is very shocking, when you see the advertisements on YouTube. What the hell are these people thinking? Like they would sell packages and tell the general public that they can pay a few thousand and be able to make lots of money, in the process. Now, you know what? If it's that easy, these guys will be doing it on their own. That's a matter of fact. So I'm not saying that those programs, that are being advertised on YouTube are junk or nonsense. They have their own merits. I suppose they might share certain points of view that I do not know of. Right? The fact is, the whole journey towards success isn't easy. Right? No one said that it's easy. But you know what? If you can bring yourself to reality and realize that the journey there is tough, you are mentally prepared for the first part. Okay, I come to the end of my presentation. I hope that had been informative to all of you. And thank you once again for watching. I'm Will D. Chai. You have been watching this on my YouTube channel.